Hi, and welcome to the Stock Scores Market Minutes for October 9th, 2017. This week's topic, traders don't get paid by the hour. Unlike most businesses where you would collect your salary or your revenue on a regular basis, as traders, our income rises and falls with market conditions. And one day can be a great trading day, the next day could be totally slow and dead. Most trades are not going to be big winners, but you can't catch the big winners that do come along if you're not willing to play everything that comes along, and that includes some losers. The key is to have small losses when the losers come along by using good risk management. And when you do have a winner, let those winners win. Don't suppress their upside potential by selling them too early. Your small winners would pay for your small losers. If, in the last week, for example, maybe I did 40 trades and probably 30 of them were small losses or small winners that kind of paired each other off. But it was the big winners that ultimately made the week successful. The big winners are what pay you. But in order to get them, you have to be willing to take those small losses. You have to be also willing to let the winners win. All right, let's get into this week's analysis. S&P 500 30-day 60-minute chart. You can see nice upward trend. Ran away a little bit, pulled back, but we're still within that upward trend line. It's bullish. It's a little overextended given the run that it's made. It broke out here a little over a week ago. And so it's probably due for some profit taking, but no sign of that yet. Looking at the longer term chart, we can draw this weekly channel. And you can see we're getting up near the top of the channel where we should get stuck. So we might have one more good week, and then we're going to see a little bit of selling pressure just because markets tend to sell strength and then buy weakness like you see here. When they pull back to the bottom of the channel, you get a bounce. When they get to the top of the channel, you usually get a pullback. All right. On to the Russell 2000. It's done very well the last 5 or 6 weeks. And you can see that if we were to make this a long-term upward sloping channel and draw a parallel line like that, we've still got a little more upside, maybe a week or two until it gets to the top of the channel, and then it's going to find some resistance. But it looks to me like this is still a hot market and deserves to be traded. On the Canadian side, the 30-day 60-minute has had a pretty good run, very good run actually, over the last couple of weeks, but it actually broke down on Friday. And so that may mean that we're going to maybe not necessarily see a pullback, but an end to the weak or the strength that we've had over some time. And it makes some sense when you look at the longer term chart, because you can see that the TSX has come right back up to the highs. It almost hit it. We could have one more strong week perhaps and on a retest, but it is going to find some resistance there. It doesn't mean it's going to go crashing down. What it means is it stalls for a while, and then it's going to go one way or the other, break up through resistance or break down through that little upward trend line that is formed. So I think the upside in the short term for the TSX is not too great, but we're talking a week or two. Beyond that, this market can still do well. On to the TSX Venture, which has been pretty quiet through the summer, which was very normal. And it is now coming alive again. You can see that on Friday it broke out of this little ascending triangle. Volume not great yet. It's up a little bit perhaps, but this is a positive sign that some action is returning to those microcap Canadian stocks heavily dominated in the mining sector. On to the Treasuries. US Treasuries, of course, tell us where interest rates are going, and they broke their upward trend line last week and had more weakness this week. I think we probably see it move lower here as discussion about rising interest rates in the US are starting to gain a little bit of momentum, and that is causing some people to sell. I don't think this is a market that looks like it's going to really go lower quickly yet. It hasn't broken through key support areas yet, but something to keep an eye on. And of course, if that market breaks down, that means interest rates are going up. On to the US dollar, which is fairly oversold. How do we know it's oversold? Very simple. Draw a line across the tops of your channel. And as you run down and away from that, that means it's oversold. What we're now seeing is the US dollar coming back to the top of the channel, top of the trend line there, and that is where we'll probably see it get stuck. So we could have another week or two of strength in the US dollar before it hits the downward trend line. But this is not really a sign that the US dollar is getting strong. It's more that it's getting less weak. And I think that's how you have to approach it. Doesn't mean it won't get strong eventually if it can break that trend line. But for now, it looks to me like it probably has another week or so, and then it's going to get stuck. On the gold side, someone asked me in my Active Live webinar on Friday what I thought of gold stocks. And at the time, gold was hitting a new low. and so I wasn't too enthusiastic. But by the end of the day, it had closed up and above its open. So that's better, but it still hasn't broken this pullback line. You can see it had a strong day there as well, but it didn't break the downward trend line. So until it can break that downward trend line, I want you to stay cautious with gold. It really doesn't have support. There's minor support here, perhaps more important support down there. And I just think that we still could see gold go lower unless it can break that downward trend line. On to oil. This is the daily chart of oil. And you can see we had a pretty good run and a lot of the oil stocks look pretty good. But then in the last week, oil kind of pulled back and hasn't looked all that great. Where is it going to stop the pullback? Well, to answer that question, draw a line across these bottoms. That's the bottom of your channel. And we're almost there. I didn't draw that line great. We could have another week of downward movement, perhaps a couple days of downward movement until it hits support. But it is nearing the point where oil should find support and bounce higher. And what we should remember is that oil has broken this downward trend line and is now starting to build rising bottoms. So there is optimism coming back to oil. It's just that in the next couple of days, there could still be a little bit more weakness. But I think looking out a week or two, hopefully oil bounces off of this trend line and tries to get back to those upward momentum. On to fear. Volatility very low. September was the lowest volatility month in the history of the market. Extremely low volatility. That makes trading more difficult. I don't think it was impossible, but September was certainly not a great month. We're starting to see the action pick up a little bit in October. Of course, earnings season is upon us, starts really next week, and that should generate much more volatility in stocks. But looking at the fear index, it's at these lows, and this really means that the volatility expectations going forward remain very low. And so until we break, that downward trend line on fear, the market is really not concerned about any sort of a correction. So my ratings then, bullish on both time frames for US stocks, although cautiously so given the runs that they've had. Canadian stocks, I've dropped my ratings down to neutral as they're running into resistance. Gold, neutral long term, still bearish short term. It hasn't broken that short term downward trend line. Oil, neutral on both time frames, but it does look like it's trying to reverse the long term weakness. Stocks continued higher this week, but volatility remains low. Watch for a trend break that is overdue. The Canadian market has rallied sharply, but now is at strong resistance, so expect it to stall. Oil has pulled back, but should bounce off of its trend line. Gold weak, but it is due for a bounce. And as I said, fear is very low. All right, let's get into the trade of the week. And I want to show you this in two parts. So I have a strategy called a worm strategy. It's something I've been working on. It's something I did in the past, and then it wasn't giving me a great reward for risk, so I stopped doing it. I tweaked the rules a little bit in the last few weeks, and I've been testing it, and it's been working really well. It's something that I do in the Active Live service that we offer at Stock Scores every day. And the key with this strategy is to look for what I call action candles, which is these little pink dots. If you followed my videos, you know I'll talk about those pink dots lots. That's called the action candle. And in this case, I do it on a 2-minute interval. So ECYT gave an action candle open on the 2-minute candle on, I think it was Monday. And that was the buy signal for the worm strategy. Well, look what happened after that. That's that 2-minute action candle right there. Was at about, I can't even remember the price, $1.70 or something like that. And look what the stock did. By the end of the day, it was up huge, and then it gapped up even more the next day. Quite truthfully, I probably wouldn't have held much of a position overnight because they don't tend to work that well. This one worked great. Another one that happened this way was Celsion, CLSN. Same thing, worm strategy, action candle on the open on the 2-minute, and it had a huge move as well. So these are those big winners that I talk about that really are where your profits come from. You sort of grind it out waiting for the big winners to come along. There may be 1 in 10 are like this, but when they do come along, that's where you make all your money. The key is that you don't sell here when there's a little bit of weakness or sell here when there's a little bit of weakness. You got to let the trade work unless there's an actual reversal. Let the trade work and maximize your reward for risk on that trade. Well, I hope you've liked this video. If you did, please click on the like button, subscribe to the channel. That will allow you to get instant alerts when I upload a new video. Tell your friends, and most importantly, trade well.